So here are some of the things that you must know if you want to start trading. Hi guys, welcome back to my channel, TechGalDiaries. So as you know, this video is going to be explaining to you some things that you must know before you start investing your money into whatever sort of market that you want, and you must do your due diligence because this is going to be a hard-earned money, and I don't want you guys to be losing it in something that you're not really familiar about and you don't have the right mindset to be able to tackle it. So when I started posting investing content, I thought it was really irresponsible of me to not make this video if I was going to post more of it. So I definitely want you guys to know that this is really important. I want all of you guys, if you're not familiar with investing at all, to watch this video and watch carefully because these are things that I wish I would have known when I started investing 3 years ago. The first point that I want to make is that trading should not be a form of income for you. Let me get this straight. It should not be your job, okay? Especially at the beginning. Because the thing is, human psychology is interesting. When you start thinking that this should be a form of income for you, you start making very strange trades and you start thinking about ways to earn big amounts of money in a short amount of time and do actions that you wouldn't usually do if you're thinking clearly. And the reason why I think that you should keep a full-time job or some sort of steady income to help you while you're on this journey is because you have this income coming in on a steady basis. You can keep a clear mind, set apart a special amount for you to make safe trades, make some riskier ones, and you won't go above that budget or limit that you set for yourself and try something crazy because this is something that you have set across in your plan. Now, a lot of people, when they quit their job or they think that this is the only way to make money, they do a lot of weird things. They make very risky trades. They put 100% into all one thing, or they think that a penny stock is going to blow up and they just do the weirdest things ever. So I don't want you guys to be that kind of person. So the second point that I want to make is that you should never invest more than you can afford to lose. Now this sounds like pretty basic advice, but you probably won't really know the extent that you will break this rule until you actually start trading. Because let me tell you, at the beginning when you set your plan, it's pretty easy to say, yeah, you know, like if the stock drops like below 20%, I'll pull out. Like I won't invest in this anymore. I'll sell it off. I'll stick to my trading plan. Like everything will be fine. But no, when that actually happens, you'll be like, oh, it's fine. It's going to bounce right back up. It's going to be all fine. And then it loses maybe like 50% its value and you're still going, oh no. This is just, you know, a bad streak. Like it'll be fine. So you make these very irrational decisions sometimes. Please make sure that whatever you're putting in, you can't afford to lose the whole amount because let me tell you, in any sort of investment, that is completely possible. Now the third tip that I have is don't get an expensive course or a mentor or a teacher of some sort before researching things yourself. Now the reason why I say this is because there's a lot of scams and a lot of really expensive courses out there that you could probably get out there for free nowadays, and I don't want you to make a decision or purchase something that won't actually help you or benefit you that much in the long run before you try out and sort of understand if this is for you. You know what I mean? So if you are really interested in trading in the stock market, try out a demo account or try out with a small amount at first. Look into reading books. Books are a great way to understand concepts, watch YouTube videos, and a lot of times if these mentors or teachers are legit, they will have a lot of free content out there that is super helpful. You should sign up for their free courses, their free email list, their free YouTube channels, and then watch their content that they already have to make sure that they know what they're talking about, and then see if you actually want to go to the next level with them. And if you're interested in something like forex, Baby Pips is a great free website that has a lot of great info out there. And just make sure that you're doing your due diligence beforehand whenever you're looking into trying something new, because you want to know if this person has the knowledge to be able to help you to get you where you want to go versus somebody who is just saying, oh yeah, like I know all the trades, I know the entire stock market, I know exactly what stocks are going to make you money, which ones will lose. So if you hear anything like that, please please run as fast as you can. Now, the fourth point that I want to make is don't get shiny object syndrome. Now, what is shiny object syndrome? Well, it's what happens when you start trading and investing. Unfortunately, sometimes you always think that there's something better, you know, like there's something better on the way. So you always are chasing for the next thing. Right when you dip your toes into something, you see something over there that's shinier. So you take it out and then you go over there. But the thing is with this, if you never commit to something, not only will that not grow along the way, but you also won't have the chance to use the knowledge and dive deeper. So this applies to anything. For example, if you're investing in a stock and you invest for it for say 10 minutes and then you see a better one and you only have this $100 to invest, for example, and so you sell it at a loss to get this better stock, and then you see something else, so you sell this after another 10 minutes to get the next one. Now this is never going to really serve you well, because if you want a long-term strategy, you want to be able to keep your eyes focused on the thing in front of you and block out all the shiny objects around you, because there's always going to be the next shiny thing. But you need to remember to be patient, because this is a really important skill when you're investing, especially in the long term. And I don't really believe in timing the market, which I'm going to cover next. Timing the market, I don't believe in that, because a lot of times when we're trying to time the market, we're making poor decisions because we think that there's a perfect time to be able to exit out and enter in. And the thing is, nobody can really predict that 100% of the time. And unless you want to be one of those crazy people who stare at these charts day in and day out and be a full-time day trader, you will not be able to time it really well, especially as a beginner. So my best strategy is, if you're a normal person, you don't want to obsess over this, please just take a long-term strategy and keep your eyes on the long term. Because if you invest properly and you diversify properly, usually you should be making at least 7 to 8% overall every year in the stock market. And this is so much better than any high interest savings account that you can find out there. Usually they're like 1 or 2% a year at the best. So either way, you're going to be making a lot more money than saving your money in a savings account or a checking account. So don't get greedy, keep your eyes on the prize. This is an investment account for yourself. This is not a gambling account. So make smart decisions and don't try to time the market. Now, another really important part that I want you guys to remember is to diversify everything. And everybody talks about diversifying, but do you know what that really means? Because I'm not just talking about your stock portfolio, okay? Like, sure, diversify the things in your stock. So maybe get one share of this, another share of this, and another share of another stock. But the thing is, that's not all that there is to it. You should be diversifying the industries that you invest in, the size of these companies that you're investing in, and even the types of investments. Don't put all of it into the stock market. Maybe leave some for crypto trading. Maybe leave some for forex trading. Maybe leave some for your high interest savings account. Maybe invest in gold or something like that. So you don't want to put all your eggs into one basket, no matter what type of basket it is. And as we know from what we've seen last week, the crazy stuff that's happened, don't put all your investments into one sort of app or one sort of bank account or one brokerage. You want to even diversify that, okay? So when I say diversify, I'm really talking about everything here. Like, any sort of way that you can diversify or you can think of, please do it. It will really help you in the long run, and I found that it gives you a better return year over year as well too. Another thing that you must remember if you're starting out trading is to please don't trust anybody's advice except yourself when it comes to making decisions with your finances. Now the thing is, a lot of you guys are asking questions like, oh, what are your stock recommendations? Any stocks that you would recommend for me to buy? Or what are you currently trading? And the reason why I don't exactly tell people, oh, this is the next big thing, this is the stock that I really believe in, this is stock that I think will be definitely something that everybody should get. I don't say things like that because my risk tolerance is completely different from yours, and our financial situations may be different. We may have different values. We might want to have different sorts of diversifying for different things that we want to invest in. So I don't think it's fair for me to say that everybody should invest in one certain type of stock or a certain type of investment when everybody's situation is unique. And if you aren't able to trust yourself and your intuition, you never get to build that level of confidence in yourself when it comes to making trade decisions. And that's the most important thing. If you aren't able to do that, I'm sorry, you're just not ready to enter this sort of trading world yet. Because let me tell you something. Trading, for me at least, it's 90% about the mindset management and 10% about the actual execution of things. If you're not able to manage your mindset, which includes things like patience, being able to manage your emotions, being able to keep calm under stressful situations, being able to differentiate fact from your feelings, if you're not able to do that when you're making trade decisions, you're just not ready to trade. So please remember to do your due diligence before making any sort of decision, and you will be fine. If you are able to keep calm, remember the tips that I just told you about earlier, and before doing any sort of trade, do it. You will be able to be successful in investing. So I hope you guys understand what I'm saying, and I will see you guys next time. Hopefully I'll be able to make more trading videos along the way now that you guys know how to be able to use this knowledge safely and not try to gamble. Okay, so I will see you guys next time.